So the big question is this: how do investors like us who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer.
Hey guys, John Boone here with the Stock Market Secret Podcast. Super excited to talk to you today about something that just crazy that just happened, and I can apply it to rich reports or other incidents of news that cause a spike in temporary volatility, and use that to make a ton of money. So with that said, super awesome thing today. So let's get right into it. So I was talking with my Jake, and we were looking at Texas Instruments, and they had this really awesome Head and Shoulders on the daily chart. And this Head and Shoulders, it was inverse Head and Shoulders, right? So inverse Head and Shoulders, it goes up to the neckline, and the stock breaks through, and it goes up basically the height of the head to the height of the neckline. So in essence, it goes up a lot, right? It just crushes it. It's an amazing, very solid, predictable setup based on the Head and Shoulder setup, which is obviously a very solid and predictable setup. So with that, this stock, right, it's absolutely crushing it in this setup. And because of that, you know, that's just an instance of temporary change or news report, something like that. It's going to create a massive breakthrough on that neckline to create a tremendous upside. Now the thing with Texas Instruments, right, is they're like 100 and like 10, 20, they were $120 stock, at least before yesterday. Hey, sorry man, I really appreciate it. And so because of that, they, they're not really volatile. So you wouldn't really day trade that, or it's just a swing trade, right? Very solid swing position. And so I was looking to buy it, right? But it's a, looking at a 40-point increase over the next month, 2 months, which is about a 40% gain, which is pretty freaking sick. Like, that's awesome. So I was telling you what my friend was looking at, and what I didn't realize was, like, these guys actually reported earnings, like, yesterday after market, which was crazy. So I found out about this yesterday about 10 o'clock, and I was doing trades on, I don't remember the ticker, I think it was TNXR, or it was somewhere TNXR. So we did trades on that, and did that trade, and I was playing my day. It was really cool. Again, one day trade, right? So I just had to make it happen. A lot of cool things. And I pulled it up on the scanner, pulled it up on the charts, and it looks awesome, right? Inverse Head and Shoulder setup is amazing. So right now I'm in like 75% of my liquid capital is in, solid assets, right? Because assets grow your wealth, you put your cash in assets, make a bunch of money. So I'm a little bit more selective with the swing trades I take, because I know that that's going to affect the amount of capital I have, mostly for day trading. So super important to just keep everything liquid, keep it all working, especially if you're looking at trading as your, a significant portion of cash flow. So because of that, I'm a little skeptical. I'm like, okay, this is awesome, man. But this is gonna take a really long time to play out. So I just chilled out and it didn't take action. You got to take action. I'm also going through the annual report for NEO right now. Super excited to actually finish that. I'm about 200 pages in. It's at 800 pages. So we're on our way. We're making it happen. Really exciting. Freaking awesome company from what I've read so far, but I'll have to finish it, so we'll see. And so because of that, Texas Instruments wasn't at top of my radar. And at the same time, they used to be in a little bit of an upward wedge before they completed this inverse Head and Shoulder setup. So I didn't take immediate action, right? Okay. So today they reported earnings yesterday. I didn't know they reported earnings yesterday. That would have been a game changer, right? Big mistake on my part for not doing enough research. You got to make sure you get that research and you know exactly what's going on. Because here, let me tell you exactly what happened and why this single position could have made over 1,000% in 24 hours. So here's the deal. And by the way, guys, 1,000% is freaking ridiculous. Oh my God. Oh man, it's just insane. If you look at like what 1,000% gain is on a multiplicative basis, it's freaking crazy. It's insane, ridiculous growth. So what happened was they reported earnings and they crushed it, right? And here's the thing with Texas Instruments is basically, and I freaking knew this too, which is why I'm a little bit ticked, but like I said, you just can't be mad at the market. Basically, when school starts, these guys freaking crush it year over year, very consistently, like 8 out of 10 times. These guys crush it when the school year starts. And it's really strange because a lot of people, they think of Texas Instruments and they think of the calculator. But in reality, that's only about 2% of their business. So the other 98% is almost exclusively from wholesale semiconductor manufacturing, which is really, really freaking interesting. That's why it's important, even if you think you know a company, read that annual report and figure out exactly where their business comes from, because a very, very small fraction of Texas Instruments is actually part of their calculator division. That was just a little bit of a spin-off that they had in the 1980s, 1980s, because they were making a boatload of semiconductor parts, and they decided that, you know, why the heck not? Let's just put out some calculators for general consumers. So a vast majority of their income actually comes from wholesale semiconductor manufacturing. But most people don't know that, right? Like, I didn't know that for a very long time. And so because of that, their public perception is drastically affected by the school year starting, as people think that there's going to be a ton of people buying calculators. And in part, you know, it makes sense, right? Like, they manufacture calculators, their stock should go up during the school year when it starts, since that's, you know, kind of their business. But in reality, like, it doesn't matter. But here's the deal, right? Public perception trumps reality, right? Like, the market literally doesn't give a crap about reality. They care about that public perception. So given that, and also given the fact that they were in an inverse head and shoulder setup, which is a ridiculously strong technical pattern, these guys are in a killer position. But I was a little bit, you know, I was rushed yesterday. I was working on this Think and Grow Rich course for you guys, which I'm so excited about. Yeah, and there was also, like, I don't know, 6 hours of school, something like that. It was weird. So because of that, I actually had to go cut off my trading early, and then do a whole bunch of just classes, and then also some of those advanced standing things, so that I don't have to waste a bunch of money on classes I already took, like we talked about in the other podcast. So I was pretty much spinning around all day. Super fun stuff. But because of that, and also just because I didn't have the focus, right? I wasn't focused on Texas Instruments, which is a big mistake. I just didn't get the trade in. I don't know, it sucks. Like, if you have the full 90-noon workday, this is why it's so important to take that last hour or so and use it to analyze these swing trades, because a trade like this might only come along once a month. And if you can make 1,000% on a trade, which I'm going to get to in just a minute on how you can do that, like, that's insane. That's something you need to do every single time. And that's why it's important, even though you have your outperforming day trading profits, to always kind of say, look, hey, you know, if I can take a good swing trade here, why not use some of the cash I have sitting aside anyway? And that's kind of the mentality I take to it, is I'll allocate, you know, a day trading fund, and then at the same time, I'll put aside a certain amount of capital for that longer term swing trades or long-term investments. But usually it's swing trade, just because you can just make more money, right? And especially in kind of hot markets like we're in right now, where indices are pretty high, it's just not worth the risk, right? Like, I can make an index return in a day using swing trades or day trades or whatever, and it's just a lot higher returning, which is totally cool. If you don't want to do that, you want to invest in indices, that is amazing. It takes no effort, no time. But for me, like, I love this stuff, so I'm willing to invest the time. I'm willing to crush it with these outperforming returns based on more active management. And I don't know, it just does really well for me. So, oh no, I gotta make the light. Okay, cool. So, I missed it out on it, and they report earnings after market. And guys, earnings reports are huge for volatility. And they only increase in significance when you have a technical setup, like the inverse head and shoulder setup. That kind of technical setup combined with an earnings report is huge, because here's the deal. These earnings reports, they come out, you know, 4 times a year, right? They're quarterly earnings reports. You guys freaking got that down, right? And because of that, they have a very large impact on public perception, because basically people are kind of guessing on how much money they make throughout the year, and then they actually report how much money they make about 4 times a year. And that's just the way centralized asset markets, and especially centralized reporting with the SEC, works for essentially all these big firms, is they just kind of like tell them 4 times a year whatever they want after the deadline, before, you know, the real deadline after the quarter ends. So, behind you, thank you. So, the earnings reports come out. You have huge volatility. It's like a massive news break, which is actually pretty funny. Speaking of news, Facebook got fined $5 billion today from the U.S. government, which is equivalent to about 3 months of their earnings during the, you know, current earnings, the amount of money they're making right now. They lost basically 3 months of earnings in this single fine. And they freaking like went up today. Oh my God, it was the funniest thing. And that's why you have to remember that these announcements, these news, this media, it just doesn't matter for so much of the market. And you always have to take it with a grain of salt and consider the technicals, because if there aren't any technical setups behind it, you know, just like with Facebook, right, there weren't really any strong technical setups behind the stock, and because of that, you know, nothing really happened. They just went up a little bit, and that was that. That was, you know, nothing exciting. So they can get a $5 billion fine, but in all reality, it might have some medium-term effects, but their stock basically was unaffected. So news is kind of like that, but earnings reports, you know, those are the ones where maybe news has an impact, at least on larger stocks, right? Like on 9 to noon stocks, news is your number one indicator of confirming a pre-market gain, especially with like pharmaceutical stocks. If they issue a new drug or a new patent, or they have a new medical trial, those kind of insights, that kind of news is just going to create an insane morning trading environment for those 9 to noon stocks based on the pre-market screeners, and then obviously the intra-market screeners. But for those, you know, if you're finding a stock and it's like 10 o'clock, a lot of times you just have time to map out medium-term, long-term support and resistance levels. But if you have time to look up the news, especially if you have like a monitor dedicated to looking up the news, that can be pretty significant for 9 to noon stocks, because you can understand and differentiate gaining stocks versus gaining stocks with news, and then compare the volume on the two. And usually you're going to see the ones with news have more volume. The ones with news trade more vaults, with more volatility, and the ones with news are usually the ones that are going to crush it for your trading. So just kind of focus on those. So with that said, with this news in most areas of the market, it's usually kind of like a hit or miss. Like with you know, any stocks that are above like $30, and pretty much any solid, well-established company, a news report or press release, it can have an effect sometimes. Usually it just kind of doesn't matter. It might go up 1%, it might go down 1%, maybe 2 or 3, you know, if it's really bad. But I mean, let's be real, guys, that's not, you know, for a long-term stock, just not a lot of money. And so because of that, it's just not a huge deal. But these earnings reports can have big impacts. So maybe say like news has an impact 10% of the time. Earnings report can have a big impact maybe 30, 40, 60% of the time. Just depends on the stock. But you're definitely going to see some higher impacts from news reporting than or from earnings reports than just simple news. So that's why these earnings reports, they're really powerful. And you'll see a whole lot of volatility, because basically everyone's readjusting to how much money the company actually made. And that's especially true for institutional investors in larger stocks. So with Texas Instruments, they're a very large stock, and because of that, they have more institutional investors than, say, a 9 to noon stock. And because of that, they're the people that are going to have massive buying and selling decisions based on the underlying revenues and the underlying earnings of a company. So Texas Instruments, right, they beat earnings, they crushed it. These are the guys that are going to go in after the market, like at 4:30, right after they report earnings, look at the stock and actually have the ability to buy them after hours with a very large bulk purchase. And because of that, you're going to see massive shifts in post-market movement in these stocks that crush their earnings reports. Same thing happened. If you guys have been following me for a while, you know one of the first stocks I ever traded was Nvidia. And before I knew anything about it, I thought a downward wedge meant they were going to go down, which was a big mistake. But what happened is they were in this technical setup just like Texas Instruments, and their earnings report was the factor that broke them out of the technical setup, which was a downward wedge, made them go up 20% almost instantly after they reported earnings. And the reason that there's so much action right after that report is if you got these big guys, they're out there and they are buying these stocks after the market reports, and they confirm their suspicions that it's a good company. For those of you guys who don't know, Nvidia, they had an insane run up. for about $100 to, I think it was just under $300 in about a year. Maybe it was like 8 months. I started trading, and I bought them as one of my first stocks because I love computers, and I'd seen what they were doing in the computer space. Really, ow, whoa, okay, yikes. Man, I'm doing a lot of running today, so this biking just, yikes, almost had a cramp, but we're okay. Just gotta stretch the hammies. Man, so it's been a while. It's been so long. Well, actually, no, it hasn't. So I get in on this position, and I see it going in this downward wedge, right? This medium-term downward wedge over the course of about 2, 3, 4 months. And because of that, they were. So I was just learning about technical analysis, and I thought a downward wedge meant that the price was going to go down instead of the price going up. And if you guys need pictures of it, I think it's in like chapter 24 of the book, something like that. And so with this, what happened is I freaked out, and I was going to school. My mom dropped me off at school, and I left my phone in the car. And it was the day that NVIDIA reported earnings, and school basically went until market closed. Like, I would get home, my mom would come pick me up. At the time, because I wasn't driving, it was like freshman, sophomore year, and so because of that, I wouldn't, like, if I left my phone in that car, I would not be able to call a broker, tell anybody, hey, let's freaking sell NVIDIA, which is, spoiler alert, what happened. So what happened was I was walking away from that car. I was going towards the entry to school, and I realized I don't have my phone. So I turn around, and I think for just a minute, like, what should I do here? Because carpool's going, right? So I remember, like, NVIDIA reports today, I gotta be on point. So because of that, I run up to the car, like, while it's driving away, and knock on the glass and say, hey, I need my phone. So I get the phone, and there we go. I bring it to school. I'm doing all this research about news and the media. And listen, guys, this is why you cannot listen to news. It's BS 90% of the time, at least for like larger companies, right? Everyone in the news is like, NVIDIA's gonna go down, NVIDIA's terrible, everyone's wrong. This is when I learned that usually the majority are wrong, right? Usually the dissenting opinion in the market is really the correct, what's actually gonna happen. So every single article I read was like, NVIDIA sucks, the world's gonna end, NVIDIA's terrible, they're too high, because they had gone from like $30 to $100 in the past year or two. So people were kind of skeptical. I knew that like the fundamental market had grown a whole lot, but moreover, it was just, they're just a freaking giant company, and crypto was starting to get really big, and so the earnings were changing at a fundamental level at that point. But the biggest thing was that downward wedge for the past 4-ish months, and so because of that, I'm going out and I'm researching, and I've been researching at home, right? I've been doing all this research after school of like technical analysis and technical setups and how they worked and what they did and how to use them. And because of that, I would recently been learning about, triangles and wedges and those kind of pattern setups where you have trend lines that collide with each other and create some sort of triangle or some sort of downward wedge or upward wedge. And I was learning about them, and I found this one website. This website, it freaking told me that like downward wedges were bad and the mid stock was going to go down. I've since learned through experience and multiple, sources and really mostly experience. But people, they're out there, they're saying it. The downward wedge is actually ridiculously bullish, and I've traded them so much since then and made tons of profit, percentage gains. It's amazing, all based on this setup, this one setup that just radically changed my perspective. But at the time, I didn't know about it, so I sold them the day they report earnings, and then they report earnings, and within 5 minutes, like probably honestly within like 15 seconds, I was like on the earnings call, because I was like that guy. Like, I was listening to this earnings call. I was so excited to hear that they were doing terrible and I was right and that everything was amazing and that the 2% gain I took in the company was just an amazing feat. But in reality, they crushed it. Earnings were amazing. Within 15 seconds, they're up like 20%. Without a doubt. No chance. No whatsoever. And it was insane. It was a crazy game. And since then, we've gone off to like literally triple, basically, right? So That was kind of my first time I sold a stock. So yeah, definitely a lot of lessons learned in that situation that I've taken out and applied and implemented into the book, which is just awesome. So going back to Texas Instruments, I didn't know they reported earnings yesterday, which was a shame. I should have probably looked that up. I just didn't have the time. Really needed more time. So these guys report and they go up 7% pretty much instantly, just like Nvidia. They go up like immediately. And after that 7% gain, what happened was they just kind of held it for the rest of the day, the rest of the night, and then into the morning. And then today, they're still up about 7-8%, something like that. So they crushed it, right? They're on their way. They're at about $120 right now. And based off what I can remember from the head and shoulder setup, just based on the inverse head and shoulder setup, based on the height of the head to the shoulder, they're going to go to about $140, which is sick. Definitely awesome. Now it's a little bit late. It's like, well, what the frick, man? They just went up a whole bunch. And when I say a whole bunch, here's what I mean, right? So when earnings come out, they're very volatile. And because of that, once you start to get good, right, you got to get good, because this is not like a basic thing. You got to get good at your technical analysis, but you can make very high multiples of profit when you do this. You can use call options or put options to drastically multiply the volatility and turn that into a ridiculously high percent gain. So for Texas Instruments, to get a short-term call, right, one that expires very soon, right, a call gives you the ability to buy the stock at a predetermined date, at a predetermined price. And this is all in chapter 21 if this doesn't make sense to you guys. It's all right there. But for a very brief intro, I mean, basically, you pick a date in the future and you have a contract with someone that says, look, I want to have the option to buy it, or the option to sell it. And Texas Instruments, their $100 stock, for their options that expired in about a month, those options are about 20 cents, which was actually really freaking insane. So I would pay 20 cents to control the option to buy this $100 stock, basically, which is amazing. That was really good. Usually you don't see rates like that, which is it was just really good. So, and one of the reasons is because the time value was so low, right? Because it expired very soon. And one of the biggest factors in options pricing is the time value, you know, how long until it expires, and then obviously the price, right? So the price at which you make money with it. So the only way that you'll make money with an option trade is if it actually goes higher or lower than the price that you set it at, depending on if you're buying or selling. So, yeah, it's called a strike price. And you know, if it was like, say it was the $100 option, the strike price might be at like $102.50. And if it goes over that price, if you're doing a call option and you want to buy it, you buy that call for 20 cents. You have to minimum lot size, right? It goes in increments of 100 shares. So 100 shares at 20 cents for one lot would be about $20. So you put in $20, and then you have the option, but not the obligation, to buy 100 shares at that $102.50 price point. And the premium that you pay is based on the underlying price at the time of the trade, and then also that time value on how long until the trade actually expires. So you got that, right? Okay, everyone makes sense? So you more info on that, chapter 21 of the book. You be a freaking master at it and go into the real depths of it and how you can use it to make a bunch of bank. But the point with it is that you're risking basically everything. So if the price doesn't expire at the strike price, then what happens is it's just worthless. It expires worthless. You're the option to buy it at this price, but because it was worth more than that price or less than that price, depending on if it's a call or a put, which is just a buy or a sell, the option to buy or sell, then it'll expire with value or it'll expire worthless. So if you're wrong, you lose everything, which is why you want to use technical analysis to not be wrong. And at the same time, you can buy a call and a put. So that would be like a straddle, right? And we break that down in the book. But like with that strategy, especially around earnings report dates, you would buy a call at a close price and a put at a close price. So if it went up a bunch, because of volatility in something like an earnings report, you would make a bunch of money. And if it went down a bunch because of volatility, because of something like an earnings report, then you would make a bunch of money either way. You're just paying a little bit more to get in the trade because, again, that options premium is your barrier to cost, and that's actually the part of the contract that changes in value if you want to like actually sell it. As long as it's an American option, which you can sell before expiration, that option premium is the part of the contract that's going to change in value, and you can sell for a profit, or you can hold it until the date it expires, and you'll just realize the profit in the price alone without any time value, right? So if you sell it before expiration, you'll have that time value, and you can also time highs and lows to sell it at the best price possible for you, which is really, really powerful. So that's why you want to trade American options, which is pretty much what all you guys are trading anyway, so not a big deal. I talk about it just a little bit in the book. There's another thing called European options. They kind of freaking suck because you can't sell them before expiration date. Yeah, don't do those. Basically, no one does them in America, so you're freaking good. But I know kind of some people listen internationally, so that's the only reason. Okay, so the options for Texas Instruments looks really, really freaking nice because originally looking at about a 7% gain. They went up 7% today. And on a $100 position, you make $7. A $20 position, you can't even freaking get in because the stock is like $100. Unless you buy partial shares, I guess you get in, make 7%. That's pretty freaking nice, I guess, yeah. So the options are a different story though, because if you're paying 23 cents for the option to buy it, and then you make like 5, 6, 7. Today they were up like 120 bucks. You make $20 when you risk 20 cents. All of a sudden, you make 1,000% profit. I mean, you freaking crush it. And that's exactly what happened with these options. Is they reported earnings, they went up 20 bucks. The prices for the options were so ridiculously low that $20 suddenly turned in to like, let's see, you're making 20 bucks a share times 100 shares. Well, look, I'm no mathematician, guys, but like, that's $2,000 on a $20 risk. I mean, that's freaking insane. So that's why, just a little bit crazy to think that I kind of screwed that one up a little bit. But hey, you know what? You just got to take it. You got to run with it. You got to make it happen. Those are options. The world of options is really, really powerful. I have a bunch of swing trade picks in options right now. They're kind of more like 6-month setups, which is really, really cool. You can make, you take like the gains that would originally be there and you multiply them. But at the same time, you're multiplying your upside. You're also increasing your downside risk to 100% because you'll lose everything if you're wrong. And that's why it's so, so, so important that you get an educational foundation and a fundamental understanding of fundamentals, right? And then also technical analysis before you really go into options any difficult, like hard, right? Like I knew Texas Instruments, I knew the underlying industry, I knew the overarching trends, I saw this technical setup, but at the same time, you can be wrong, you can lose it all. So you just have to be careful with it and make sure that you're doing the right thing so you can get the right profits. Hey, on your left, thank you guys so much. So yeah, it's really cool. I love them, they're awesome. I know one position, ouch, on UCTT, and then I think I was talking about that one, and this other company, they do Petrol, OXY. I got some cool calls on those, and they've gone up, maybe like 2, 3, 4, 5% based on technical analysis, which are really good. Those have increased in a value of about 20 to 30% in the past 2, 3 weeks. So that's freaking cool, because now what you're able to do is once you get good, hey, thanks guys, thanks so much. Once you get good, you can really increase, the amount of money that you make, but it all comes from putting in that work at the beginning to have a quality base to work through. Like you have to know what you're doing, because if you don't, you get freaking screwed. And that's why it's important to have like that quality financial education so that you can make a bunch of money, right? It's just so, so, so cool. I love it. It's awesome. And you can trade options on 9 to noon stocks. Those are like options are risky. Like those are like crazy because 9 to noon stocks are already moving hundreds of percentage points in a day. But look, I'm not going to diss it. I mean, if you can find a really, really solid ABCD setup and trade a call on that, I mean, you can straight up just skyrocket the value of your portfolio. Talking about 1,000% gains. I mean, think about a stock where it costs maybe 10 cents to control it, and it goes up, you know, $2, right? It's like a $4 stock, or maybe it goes up, you know, it's insane. It just depends. It's on a case-by-case basis, right? Like, I can't guarantee results, and I can't, you know, say you're gonna make $1 million in the next year, because honestly, it's hard work. You gotta freaking put in the effort. It's not like get rich quick. But options are a very, very, very great way to, you know, to take dividends from the discipline that you develop as you start to trade. Because you can find these very, very strong setups, and you can use them as a tool to fundamentally skyrocket your productivity, skyrocket your output, skyrocket the profit that you can create from whatever it is that you trade. And that's really, really powerful for a lot of people. But you gotta be careful, right? Like, you can sell options too. I know, you know, like when you buy an option, obviously you're buying the ability to sell. And that also makes them a very good candidate for if you're holding a stock for like 10 years and you use technical analysis to fundamentally understand, maybe you see a setup, like an inverse head and shoulder setup, and you know that the price is gonna go up a lot. So with Texas Instruments, I had them in my old portfolio before I moved over after turning 18. And, you know, if I was gonna keep holding that, which I definitely would, I could sell, and maybe they're a bad example, but you can sell an option, right? So you could sell somebody the option to sell it to you, right? You could sell a put if you pretty much knew that it was going to go up because of a technical analysis setup, and then you create a time frame for that option, right? An expiration date that was within what the chart basically said was going to make sense for that pricing. It's going to make sense for, you know, if you look at the chart, you look at the setup, you predict how long the price will probably go up, and then you want to make sure that it stays up for the length of term that you sell your option for, so that you don't accidentally get screwed out. And it's not a huge deal, right? Like, the worst thing that's going to happen is the price of the stock goes down. Somebody has the ability to sell it to you. They sell it to you, and you accrue more stock as it's low, and then it increases in the long term. For long-term investors, that makes sense. And at the same time, your upside here is really sweet because you make money, right? You sell the premium price based on the time value and the inherent value based on the strike price, which is the difference between the current price and that options price, which is very, very, very powerful. It allows you to accrue passive income and increase profits in cash from your long-term portfolio. So if the stock goes up, and it stays up for the length of your option, say it's like a month, 2 months, 3 months, if it stays up, all of a sudden, the option expires worthless if it's a put, right? And then you get to take the money that people paid you for that option and just freaking put it in your pocket. It's like a dividend times 3, because it's usually, you get paid a lot more than a dividend for most positions. And you have total control over it. And, you know, the worst thing is that you either have to buy when it goes low or you have to sell when it goes high. And, I mean, that's not freaking that bad. If the stock goes up 15% and you're like, wow, I can't believe it did that. I never thought it would do that. You know, all of a sudden you can take that and you're basically just selling to lock in gains, which is cool. And you're getting paid to do that, right? So when they pay that premium price, they've also got to overcome that. So if the strike price is like $105, maybe they paid like $2 or $3, $4 to actually get the option, which is what that should have been. And it's what it is for a lot of the longer term options. You can, the break even isn't $105, right? If the break even for them is about $108, $109. And so because of that, it pushes them to really hold that thing to the brink. And so you have a higher chance of, if you sell one, that you can make a whole bunch of bank. So it's really, really cool. There are a lot of really crazy things that you can do to leverage yourself and leverage your portfolio and leverage other people's money with options. When it all comes down, you know, once you freaking know what you're doing, you can crush it, man. It's crazy. I've seen so many people. I mean, Texas Instruments, phenomenal example. 1,000 times percent gain in a freaking day. And it's all based on that volatility that comes from an earnings report. So if you can find a setup that looks really nice and then a tension point like an earnings report, you can pay a very, very, very cheap price for a short-term option and then predict the peak using technical analysis and then sell that thing at the peak for massive, massive gains with very, very, very minimal money down. Because remember, right, you're buying 100 shares at the same time. So that $200 or the $20, right, turns into $2,000, which is just really powerful. It gives you a ton of levers that you might not originally be able to. Like, you know, if you really wanted to buy 100 shares of Texas Instruments at $100, that would be a 10 grand position. But you're getting that same upside for a limited time through an option for $20. So it's just a massive, massive shift in your barrier to entry. Just make sure that you freaking know what you're doing before you get in it. I mean, worst case scenario, you lose $20, but at the same time, I really want you guys to adapt this mentality that you're trading a portfolio worth 10 times, worth 100 times what you're actually trading. Because once you do that, you start to trade like you're wealthy. And let me tell you guys something, Warren Buffett, he did not get wealthy by changing his investment strategy after he made $1 million. It just didn't happen. He started off disciplined. He lived his whole life disciplined. Started off researched, lived his whole life research. He put his dedication, his time, and his effort into everything that he did. I read this story, and he was like, he had this massive goal to be a millionaire, which when he was a kid was a whole lot of money. Still is, just, you know, remember inflation. He had this goal to be a millionaire when he was 30, and he was so pissed that it took him just a little bit longer. And he was ranting to his friends, but you know what? He freaking made it. One of the most successful people ever, and it didn't come from changing strategy. So what I'm saying here is to trade like you're trading a portfolio that's 100 times bigger than what you currently have, because that's going to help you make decisions based more on percent gains than dollar gains. And that's a ridiculously powerful mindset. If you guys don't get anything out of this today, please, please, please get this focus on percent gains over cash gains. Because if you can make freaking 10% over and over and over and over, it doesn't matter what you start with. You're going to compound and create a tremendous amount of wealth. And a lot of it all comes from technical analysis. It's so powerful. It's the one tool that lets you create these insane consistent profits. But at the same time, right, like we're looking at options trades, you're thinking about losing $20 to make $2,000. I want you guys to like 10x, 100x that number, right? Think about losing $2,000 to make 200 grand. And then think, okay, does this position make sense for me? Is this something I want to do? You know what I mean? Because then you're going to take better decisions when you start out, because you're going to feel, you know, if you can convince yourself internally that you're risking, you know, $2,000 and you could lose all of it, you have to have a massive payout on that other side to crush it. And guys, I'm not trying to say that 1,000x% gain, 1,000 times percent gain, 1,000% gain is normal, because it's not freaking normal. But I want you guys to have this belief that the stock market is this insane land of opportunity, absolutely ridiculous possibility. And I swear, guys, like, people may bank on this without a doubt. This thing came across my desk yesterday. Like, it came across the desk of hundreds of thousands of people yesterday. And it didn't just come across the desk of people with 200 or $2,000 to invest. It came across the desk of people with hundreds of thousands of dollars. And they are very, very, very likely made millions and millions of dollars today. Isn't that freaking insane? That like somebody someplace made, and you can look, right? You can look, everything's pretty much public after 24 hours or 48 hours. Just depending on insider trading rules with firms, and then also individual reports from these centralized exchanges. Like, you can actually see like the trading history. You can see it to the level 2, right? Like, you can actually see the trades that occurred in the marketplace. And with options chains, same thing. You can see the last price. You can see the amount of shares that were exchanged at the last price. So if you see 1,000 contracts traded, you know that somebody had control of 100,000 shares. And if someone had control of 100,000 shares, they made $20 a share today, all of a sudden, that person made $2 million in a freaking day. That's the power of an individual in the world's most powerful economy ever. It's insane. These financial markets create such tremendous amounts of wealth, so much opportunity for so many people. And that's why it's just freaking awesome, man. Because I want you to take this inspiration, right? Like believe, right? That the biggest barrier for so many people, I swear, I was just at this art thing. I'm trying to, go out there, have an amazing time, meet a ton of fun people. It's cool, right? There's this art thing, and there's probably like, 40 people there, I don't know. But I meet this one guy, and I'm talking to him about what he likes, and he likes to draw animals that are nearing extinction. So I'm like, that's pretty cool, man. That's pretty specific. Like that, how'd you get into that? That's awesome. And so we talk. And then he asked me what I do and what I like to do. And I'm like, dude, I love trading stocks. It's awesome. And he's like, oh, no way. Some friends in my dorm were buying Bitcoin just a couple months ago. And I'm like, dude, that's so freaking cool. I don't know if it was a good idea to buy Bitcoin a couple months ago, but like, that's cool. And I think it's kind of crazy to see how like Bitcoin and cryptocurrency, and this all this get rich quick crap with crypto is really getting a lot of people into financial markets, which is interesting. I know a lot of people that I trade with, my basis, right, is just in traditional equity markets, and I've applied that in cryptocurrency markets and crushed it. A lot of people I know, they're from the mining space, they're from the blockchain space, and they got into financial markets because of Bitcoin, and that's really cool. And it's awesome that, even though it's like probably not the best place to start, it's definitely a risky alternative market. It's had a super big impact on a ton of young kids, young people getting into financial markets, and then they discover indices, and it's just very, very, very powerful. I just think it's so amazing that like there's this vehicle that's allowing more people to get into the financial markets and discover the insane power behind them. And hey, you know what? Maybe we'll be trading Bitcoin options soon. I don't know. It's hard, you're like trying to time an entire market with Bitcoin because they're basically like the market index for crypto. So anyway, we're talking to this kid, and this guy, he was like, yeah, I don't know, stocks are kind of cool and all, but I just don't really want to, I never really got into that stuff. And I'm like, oh, cool, how come? And he's like, I don't know, man. And basically he was just like, and it was cool. Like, I don't know, I get like, active trading isn't for everybody, and that's totally cool. But if you're listening to this, you do active trading, you're freaking awesome. You're so cool. Because it's so much fun. And you're part of this niche community of people that are out there crushing it every day, better than 99% of wealth management. I don't know, on Wall Street. It's just insane. It's amazing. It's amazing opportunity. And growth, it's just awesome. But for like everybody should have a long-term portfolio, right? Like this is the key to generating wealth. It's not like the guy freaking owned real estate. Like there was nothing tying up his assets. And like the younger you are, the better it is to invest. It's the best time possible. And so, it's not like it gets worse with time. Just freaking gets better with time. It's awesome. I love it. And so, I'm like, dude, why aren't you in finance? Finance is so cool. You can make all this money. All you do is like push buy on this one index, and you're freaking set for the rest of your life, dude. And he's like, I don't know, man. It's just a lot of stuff that I don't know about. And that's the kind of thing that just like sucks for so many people, is there's this massive educational barrier to entry into finance. And because of that, they don't take action, they don't commit, they don't start generating massive amounts of real savings and retirements through these investments in the American economy. And that freaking sucks. So please, guys, please. Most of you guys, I know you're listening to this, and you are in the stock market because you're freaking listening to a podcast about the stock market. But look, if you have people around you and they're growing up and they don't have assets, help them out, man. Share this crap with them. Do whatever you want, but like, it's so important that people make bank with assets. So just like, I don't know, I just love to share with people like, dude, here's a book. Like, I will hand them a book. Just buy assets, man. Make bank. And it's so crazy to think that message is ridiculously understated and never, put in placements in schools or universities, crap like that. Like, the education's just freaking messed up. I don't know, man. at least for wealth and finance, most people, it's like you shouldn't have to get a degree in finance. Like, I'm not going to get a degree in finance to learn how to invest my money. Like, that's stupid. I don't want to do that. And so you just kind of have to like make it work through your personal education. I mean, I don't know, man. That's why I wrote a book. And yeah. Whew. All right, guys. Today was a little bit of a crazy day, but I'll tell you what, it was awesome. It was amazing. I wish I had this time yesterday, because I would be a lot richer today if I got into Texas Instruments. But hey, you know what? What are you gonna do? Next time, right? You can't stay fretted on it. You can't worry about it. Just gotta let it all happen and keep making the right trades. Because look, I use this as fuel. I don't use this. Like, if you miss out on a really, really good trade, like Soli, right? I was in that 240 grand trading competition about 2 or 3 months ago, and Soli went on an ABCD setup and basically quintupled in a day. Like, I was trading it on that fake account for that competition rather than a real account. Like, that was a little bit, I kind of, that was something. But you got to remember, right? Like, use that as fuel. And that's what I do, is I use that as fuel. When I miss out on a really, really, really good trade, instead of getting pissed off, think, oh my gosh, that is so awesome. That stock just went up so much. Look how powerful that is. And just reinstate that conviction that these financial markets are ridiculously powerful and they're life-changing assets. They can just shift every single perspective you have about generating generational wealth through these compounding assets, and use it as fuel, right? So like, if you see the stock and it crushes it and you miss out on it, you're like, that freaking sucks. Instead of saying that freaking sucks, say, oh my God, stocks are awesome. Use that as fuel so that when you get into your next trade, you're less hesitant. If you're less hesitant, you're going to make more trades. And when you make smart trades with quality risk-reward ratios, like I talk about in chapter 35, you just keep making the right trade with a 6, 3, 5, very, very, very high risk-reward ratio. If you just make those trades over and over, especially with 90 new trades, but also in long-term investments and swing trading, like, you're going to find success. And you're going to crush it. Because it all comes with time. And it only gets better with time. So, hey, guys, a lot of crazy, awesome stuff here. I hope you took it. I hope you loved it. I hope you got a ridiculous amount of value from this. And use it to go out in the marketplace and crush it. Because I'll tell you what, man. If you take 100 ABCD setups, you take quality ABCD setups, like today, I took an ABCD setup with a downward wedge on this one talk. I forgot the ticker on it. And they just kind of tapered off, and I got stopped out at the bottom of the C. And I know, like, that kind of sucks, right? Like, I lost 3-4%. But the upside on it was like 13%, 14%. I know that if I take that trade over and over and over and over, it's going to produce long-term success. And that is the power of understanding technical analysis and being able to apply it to create these ridiculously profitable trading setups for long-term gains. Hey, guys, thank you so much. Have an awesome day. I'll see you later. Bye.
Want more stock market secrets? If so, you'll get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses it took me years to uncover completely for free at 9toNoonSecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% per trade daily.